Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are in focus today. Let's get started yet again with all the stocks that are in news. Well, Indigo is in focus today on the back of a note by Motilal Oswal, which is maintaining a neutral on the counter, and the target price they have set is 4,970 rupees. They feel that the business outlook is very, very optimistic. Interglobe Aviation has expanded its domestic network to 88 destinations and added new international routes, including 7 new destinations, while navigating fuel price volatility and economic risks with an order of nearly 985 aircraft, including that of Airbus A350 and 900s. The airline aims to enhance efficiency and meet the rising demand by calendar year 30. Now, Indigo also aims to solidify its domestic leadership while preparing for global expansion through its reassured development and create strategy. Now, Indigo is boosting its international presence through strategic partnerships and loyalty programs. In FY24, it served 106 million customers and added 63 aircrafts. And on the back of that, Motilal Oswal is maintaining a neutral on the counter. Currently, it has declined from the day's gains. It has given up those gains. In fact, it is trading, it's reeling under selling pressure right now with cuts of 0.5%. But Vaishali Parekh, who's the Vice President of Technical Research, Prabhudas Lilladher, is now joining us on the technicals. And of course, Ria is joining us yet again from our research team. Vaishali, tell us, you've picked out Aster DM for us. Tell us, what are you penciling in on the charts for this counter?
So yes, good afternoon everyone. Aster DM, we are seeing that the trend is very buoyant, and right now we are seeing that there is a good volume, and it's trying to come out of its consolidation range. So I would say keeping 410 or rather 400 as a support level, I think the stock is likely to get into the new price territory towards 430 to 440. Because also if you see the previous data, 420 acts as a trigger. That is the previous high. So if we sustain about that, we could be looking at around 435, 440.
All right, that is Aster DM on the charts. But coming to you, Ria, then Torrent Power is in news today. In fact, it's trading with gains of over 2%. Tell us, what's the news flow here?
So Torrent Power is definitely in focus today after it has received a letter of intent from the Maharashtra State Electricity Company, since it has been selected as the successful bidder for the supply of 1500 megawatt energy storage capacity from a pumped hydro storage project. And MSC DCL is in fact going to procure energy storage capacity of 1500 megawatts from this pumped hydro storage project for a period of 40 years. And it is important to highlight here that this is the first long-term pump storage capacity LOI to be awarded in the country. And if you look at the stock, it is reacting very positively and it has spiked up almost 9% right now.
All right, that's Torrent Power soaring away in trading with gains of almost 8.9%. But on the sidelines of the Renewable Energy Summit, Prakash Priyadarshi caught up with the IRIDA CMD Pradeep Kumar Das, who expects the government's nod of a 10% stake dilution in 2 to 3 days. Let's go across and listen into what he had to say.
We will be going for fresh issue because we require fresh capital for our net worth addition, because we have to maintain a healthy CRAR. So post our IPO, our CRAR was 25%, it has come down to 20%. And the kind of disbursement plan what we have, our CRAR will further go down. So any ratio of below 18% is not a healthy signal. So we have to periodically pump in equity. So we have decided to infuse equity to the tune of 4,500 crore to 5,000 crore this year end. For that, whatever natural dilution will happen, that will happen for Government of India. Government of India is not going to sell anything. Automatic percentage dilution will happen. We have sought 10%, up to 10%. We are waiting, maybe in a couple of days we will be getting the approval.
And well, on the sidelines of the Renewable Energy Summit, Prakash Priyadarshi also caught up with the Mines and Renewable Energy Secretary B.S. Bhalla to talk about the government's capex plans for the sector. He remains confident of new capacity addition and the financial sector's ability to meet the funding needs. Let's go across and take a look.
We have been talking about a number of about 30 lakh crore in general for the RE sector development till 2030. And therefore, and 30%, let's say the normal debt equity ratio, you would need about 30% of that as debt, as equity. 70% of the 30 lakh crore is for 22 lakh crore is what is needed in debt financing. Not necessarily only from the banks, could be money market, could be other kind of debt, but that's the kind of a number. So as against our estimate of debt requirement of about 22 lakh crore, we have the banks and the financial institutions offering to lend or committing to lend an extent of about 30 lakh crore.
and the pace at which renewable energy projects are being developed, I think evacuation will be a challenge going forward. So, any strategy in place, especially for such projects which is being developed in a difficult terrain like Ladakh or somewhere else.
We have already when we about a year and a half ago, if you recall, we came out with a transmission plan for 2030. In fact, we've already designed and come out with a specific plan for adding transmission capacity by 2030, more than 500 gigawatt capacity. So taking, I think it was 537 gigawatt, if I remember correctly, is the transmission capacity already planned. But what happens is that's something, so we are proceeding as per that target, as per the plan which has been made. And this plan was made in consultation with industry, it was made in consultation with the states, and of course our transmission players. So therefore, that plan is on track.
And well, let's put the spotlight on the real estate sector then. We caught up with the analysts from Magic Bricks, Knight Frank and JM Financials to understand what's next for the real estate space and will this uptrend really sustain? Let's go across and listen in.
I think real estate as an industry continues to be on a strong wicket. We are seeing the bull run is continuing. I think the market will tend to do better, at least in the short term. But at some point of time, I think affordability will take a pinch. You're looking at the industry giving you between a 10 to 11% kind of return over a long period of time. And that's quite favorable.
The vantage point we are looking at both sectors doing well at least for next 2 years. The affordable housing was not doing good for last 3 to 4 years. This year, with the Pradhan Mantri Awas Yojana 2.0, we are expecting even that sector getting a boost. Even going forward, we still don't see any dark clouds, even for office sector.
Going forward, we expect roughly around a 12 to 14% volume growth for this year, and pricing growth somewhere in the 6 to 7% range, which means the overall industry will probably be growing at a 20% top line for FY25.
All right, with that, it's time for us to slip into a short break. Don't go anywhere after the break. We'll get you some more stocks that are buzzing away in trade. Right, welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are in focus today. So let's resume then. Ria, you've picked out Aurobindo Pharma for us. This one's declining in trade with cuts of 2%. Tell us what's the news flow that's leading to this decline?
Yes, so the new injectable facility of Eugia Steriles Private Limited, which is a 100% step-down subsidiary of the company, has received an establishment inspection report or an EIR from the US FDA after a pre-approval inspection of the new facility was conducted at Andhra Pradesh from the 28th of March 2024 to the 5th of April 2024, which is why the stock is down over 2% today.
All right, moving on to the insurance space that is in focus today. It is on the back of a note that has come out by JP Morgan. Now, JP Morgan has mentioned a couple of names, SBI Life, ICICI Prudential and LIC is on their radar. It is because the distribution landscape in this industry is now diversifying, is what JP Morgan is saying, elevating concerns on growth from potential saturation in the banca channel. Insurers are investing in tech. Analytical capabilities are likely to improve the channel's productivity. Also, this will offset the higher commission expenses. They're implying a lower operating cost outlook ratio. Also, higher margin products are gaining traction to neutralize the impact of the surrender value regulations, and they expect the second half of the new business margins to be better than the first half. Now, on the back of that, they prefer more diversified players such as SBI Life and ICICI Prudential Life. And they're reiterating their overweight on New India Assurance on improving fundamentals, and they're underweight on LIC on the potential margin pressures. And on the back of that, SBI Life trading with gains of 0.7%. ICICI Prudential is reeling under pressure with cuts of almost 0.5%. So that's the life insurance pack that is in focus today on the back of this note by JP Morgan. But we will move on then. Ria, you've picked out United Breweries for us. Now, even though the news flow is positive, discount is reeling under a bit of a selling pressure. But tell us nonetheless, what's the news flow here?
Yes, well, so after Kotak Securities meeting with the management of United Breweries, they have articulated the four major priorities of United Breweries going forward. They are going to be addressing portfolio gaps in the future, ensuring availability of all SKUs across all markets and innovations to drive premiumization and market development, and they are going to expect new launches in the near future. They've also said that they are going to focus on modernization of the manufacturing network to make the company future ready, and they are also going to focus on regulator advocacy and on enhancing the organizational capabilities. Now, the company has said that they are aspiring to deliver double-digit revenue growth with an EBIT margin expansion to 10 to 12% versus the 6% margin in FY24 over the next 2 to 3 years, and this recovery in the EBIT margins to the pre-pandemic level of 12 to 13% warrants a favorable regulatory tailwinds, and they are also expecting an improvement in bottle recovery to 72% from the earlier 65%, which is actually a key margin lever for the company, and they are also expecting further improvement in premiumization going forward.
All right, moving on then. Vaishali, you've picked out IndusInd Bank for us. Discounter hasn't really done much, in the last 6 months. It's only in the last 1 month that it has managed to move up a bit, some 9-odd%. Tell us, what are you seeing on the charts for this?
Totally agree. Actually, IndusInd has really not participated as compared to Axis, ICICI. Now that Bank Nifty is going so strong, and we are awaiting the Fed outcome. But having said that, technically speaking, IndusInd has given a breakout above a long-term trendline channel and also trying to sustain above the 200-day moving average. So all going well. I would say the risk-reward ratio becomes quite favorable from here on. So 1455 would act as a support, and once we see a close above 1480 and it sustains well above that, I think this stock can go to as a near-term target towards 1520, 1530.
All right, that is IndusInd Banks on the chart. But Ria, coming to you, REC, this counter was up 1.5% in the morning, but it seems to have given up those gains. It's trading flat now. But tell us, why was this stock up 1.5% in the morning straight?
Yes, so at the RE Invest 2024 conference, REC had signed a non-binding MOUs with RE developers aggregating to about 1.12 lakh crore rupees, which will be implemented over a period of 5 years. The company has also undertaken a non-binding financial commitment of increasing its renewables loan book to over rupees 3 lakh crores by 2030, and this is going to increase the share of renewables from the current 8% to 30% by 2030, as REC's loan book is projected to be at rupees 10 lakh crores by 2030.
All right, Vaishali, coming to you. IEX, Indian Energy Exchange, is what you picked out for us. Now, this stock is actually trading at its 52-week high. So, is there more steam left? What is the upside to this?
Well, actually, yes, this stock has done very well, though it is in the overbought. But I think it is still poised for further upside. I'm looking at the weekly chart. Even for a longer term perspective now, 215 acts as a good support, and I think it's heading down towards 235 to 240 levels from here on. So this is one stock which is looking quite buoyant from here on.
All right, on that note, Vaishali and Ria, thank you so much for joining us. We have come to an end of all the stocks that are buzzing away in trade. But moving on to the IPO rush that has returned to Dalal Street, with companies raising more than 61,300 crores this fiscal year alone, and bloated listing gains for many stocks. But is this enthusiasm a really long overdue, or is it just over exuberance in the primary market? Let's find out. Let's go across and listen in to Pranav Haldia and Sandeep Sabharwal's take on that.
We shouldn't read too much into the oversubscription numbers per se. But I think, as long as IPOs are getting subscribed, we have to again be conscious of the fact that, firstly, no company wants their IPO to fail. So they would not price it in a manner that, is extremely exorbitant in its pricing. I think that if there are good quality issuances at attractive valuations, there would always be enough buyers for that. And that would not necessarily either impact other IPOs or even the secondary market.
Housing finance is a business which has issues related to continuously falling margins, because every financial institution is into housing finance now, and the ROAs also will be lower than many other lending businesses. So I find it tough to understand the valuation at which this stock is trading. The only explanation is low liquidity, and that has driven, and the buying which is happening, that's driven the price up.
And well, all eyes are on Federal Reserve today, the FOMC meeting that is likely to take place as of today. But the US Central Bank is expected to make its first interest rate cut, and that's the reason why all eyes are turned towards the Fed. Now, this is going to be in more than 4 years that the Fed will be cutting its rate. Meanwhile, the debate around the rate cut is no longer about when, but about how much. Anisha Jain is joining us to tell us what to expect from the FOMC meet that is likely to take place today.
Oh, well, yes, the consensus is there is going to be a rate cut. Now, whether it is 25 bips or 50 bips is the biggest debate point. 50 basis point is something which people say that the Fed has the room for, but there is part of the street that believes that 50 basis points cut might, kind of indicate that there's a deeper problem in the economy and that it needs extra push. So that's why it might be a bit negative. But if you look at the probability right now, over 60% of the participants believe there is going to be a 50 basis point cut. 25 basis point would perhaps be very measured, very moderate, given the fact this will be the first rate cut that US Fed will announce in a matter of 4 years, because the last time the interest rate cut cycle had started was back in 2019-2020, just around that COVID time period. Now the situation has improved considerably. Inflation has come off materially. Remember, at one point of time, you were staring at inflation levels of 9-10%. That's come down right now. You also have the fact that labor market has weakened a bit. Economic data has been steady. We just saw the retail sales data coming out, and the indication was that at least the base economy is doing okay. So that is also something which provides that bit of fillip. Having said that, the dot plot is also something which is going to come out today. So not only the interest rate decision of tonight will be important, but the trajectory from here out is also very important, because part of the street believes that there could be further hikes, or rather further cuts, I beg your pardon, to the tune of 100 basis point in the next 3 meetings as well. So a direction towards that will also be important. Whether there's a tweak in the inflation and growth estimates for the next couple of years, that is too something that the street will watch out for. Of course, this is a very important meeting, because in November we all know that there is that US election. So just ahead of that, how the US Fed poises the overall economy is something that we'll watch out for. Lots really to watch out for. But yes, the million-dollar question, 0, 50 or 25, we'll get to know tonight.
All right, we also spoke to MD and CEO of Aditya Birla Sun Life AMC, A. Balasubramaniam, and co-head fixed income Kaustubh Gupta to share their insights on the same. Let's go across and listen into that conversation.
From a US perspective, look, the inflation has been the buzzword around the policymakers' mindset over the last 18 months. In terms of magnitude of the rate cut, the point is that it is dependent upon how soon Fed want to make sure that the financial conditions move from restrictive territory to more like a neutral territory. If you look in terms of the economic data, unemployment rates have increased marginally, which is from 3.5 to 4.2. Inflation in terms of momentum is already trending closer to 2, which is what their long-term target is. And it seems that Fed, which is in the pursuit of seeking the soft landing, wants to make sure that the monetary policy conditions normalize pretty fast. The nominal growth of US is closer to 5.5 now, which means that they need to move faster, and which is why the debate in the market whether they will start with 25 or 50. I don't think giving a indication of 50 basis points gives some bit of insight that there is some crisis evolving, but it is more like making the normalization process faster so that it envelopes into a kind of a soft landing scenario. Coming to the emerging market like India, they have run quite macroeconomic stable policy as their policy bias, and which is why they have run orthodox policy making. As we speak, once the Fed start cutting rates, market will be convinced that the dollar strength is behind us, which means that all these emerging market central bankers, they can focus back on their local growth inflation matrices rather than securing external stability as a factor. Which is why I think Fed, which is the anchor for the world monetary policy setting, once it starts moving rate, all emerging market policymakers, including India, they will check back on their local macros, and they will also start salutary moving in the same direction. May not be in same magnitude as what Fed can move, because Fed is significantly away from its neutral rate. But directionally, India will also cut rates.
But Bala, historically, when we have seen that the rate cut cycle starts, a lot of FIIs go to the emerging markets because that is where the bigger delta is. Do you think this will be the fillip for the FIIs to come back to India? Because, of course, this year it's all been about the DII flows and the retail money coming in. But at least in September, there are signs that FIIs are coming back to India.
I think there's some probability. I think as the rate cut cycle begins and the interest rate becomes cheaper from borrowing point of view and the liquidity gets globally get better, as long as the borrowing become cheaper, there's generally the tendency to actually look at markets which can actually give better outperformance to the global market itself. Therefore, in general, we have seen emerging market allocation improves. But this time, my own belief is it could be different. Again, given the fact that while the rate cut will happen, the cost of borrowing will not come down very sharply. It will again be a gradual manner. I think still the interest rates, dollar returns being in the range of about 10-year bond is about 3.85, and the general borrowing rates in the US, in say home loan rates about 5.5 to 6.5%, they are not going to drop immediately given the fact that it will take some time for it to get adjusted in the borrowing rates. Therefore, it will be a gradual process. Definitely, I think people start looking at other markets.
And earlier, we also spoke with Anurag Singh, who's the managing partner of Ansett Capital, where he expects a 25 basis points rate cut from the US Federal Reserve and a dovish commentary by the Fed Chair Jerome Powell. Let's go across and listen to what he had to say.
These rate cuts are like bullets Federal Reserve has. And finally, if you look at their dot plot, eventually they want to get to like 3% by end of 2026, which means that all they have is like 9 bullets. Why would you want to waste 9 bullets by firing 2 in a row just at the start and just kind of mislead the market? So I think all of this together, makes me believe that it'll be 25 basis points, but with a lot of dovish talk. I think Chair Powell will have a lot of dovish talk to do tomorrow. And I think that's about it. That's where my head set in, and I think that's how it's going to be, unless we all get surprised tomorrow. So never say never.
All right, with that, it's a wrap on this edition of Market Fatafat. I'll take your leave. Thank you so much for tuning in. Don't go anywhere. Closing trades will take the market action forward.